Good morning, everybody, and welcome. My name's Harry, and this is Exploring Crypto. So each Friday, we just do a little 20-30 minute stream, just going over the news that's occurred in the week, having a look at the BTC price action, as well as some other altcoins. And let's face it, we've had a lot to cover this week. Even in the past 24 hours, the amount of news that has come out and the reaction that the BTC's price has been pretty phenomenal. We're going to delve into all of that. We've had other news, more allegations being thrown out, more hacks, more exchanges being sued. We've had Silvergate going into involuntary or voluntary bankruptcy. So quite a lot. And we can see that, well, we will see when we get into the charts, how much that has impacted the price of cryptocurrencies, not just BTC, all hail the king, but everything else that's there. So what we'll do now is we'll just dive in and we'll start covering it all. Okay then, so for those of you that are new to this and just wondering what you're looking at here, this is just my sort of landing chart page, if you will. BTC on the top, we've got the US dollar in the bottom left, we've got Ethereum in the middle, and then we've got it's the S&P, but it's the US 500, just so I've got a few more candles to have a look at there. I'm just looking at Bitcoin at the top at the moment. You can see we're on the daily here, but last 4 or 5 days, we have had red days, and yesterday was a particularly strong red day. And if we just get a measure out, just from open to close, I can actually get out of it. We were talking about 6% down, around about $1,300, which, in days past, $1,300 was absolutely nothing. But taking us from 21,600 to just about 20,000, it's starting to get to those sort of worrisome times, and a 6% drop is certainly not to be sniffed at. The overall drop over the last week, if we just have a look at it from that point of view, has been 11.5%. And this all stems back to the clear rejection that we had in and around 25,500, which, as we can see again on this chart here, was just around about the height that the market got to from the summer of 2022. It was a fairly decent rejection there. There's a lot of overconfidence that went with that. And since then, yes, there has been an awful lot of bad news, which has helped drive those markets down, but the prices continue to fall. We will delve into BTC's price a little bit later on. We'll have a look at what happened over the 24 hours and also what is happening right now and where we may expect the price to go in the future. Hey there, Tom. Nice to see you there. Yo, as he says, Tom Ford. Right, let's have a look at some of the news. And I was going to lay out a load of separate news articles about this, but actually I came across this one here, which pretty much covered most of them. We'll go into other news articles afterwards, have a look at in more detail. But the six key headlines that came here. And this is titled Worst Night in History of Crypto. First off, I doubt that, but I love the clickbait title. 6 news items caused catastrophe. I can't even speak. It was that devastating on the market. I don't know what this website is, but look at it. I don't even know where the news starts. There's that many adverts. Right, so let's scroll down here. Here we go. So, March 10th, the crypto market experienced a massive sell-off that wiped out billions of dollars of value in a matter of hours. That we definitely saw. Main cryptocurrencies, BTC and Ethereum, both fell 7% in the past 12 hours. It's actually more than that because the fall has continued today. One of the biggest losers, this is number one in their 6 items, I don't really buy into this one, was HT token, which saw a sudden 90% drop in value. This was due to a series of leveraged liquidations by some users. Despite significant decline, Sun maintains that such market fluctuations are normal. You know what? Let's just break from it. I don't actually follow that token. Let's see how much it's recovered, if at all. Whoa. Oh, yeah, that's a wick and a half, isn't it? I think someone pressed the wrong button on the exchange there. And yeah, someone's made a hell of a packet buying that up. Reminiscent of when Bitcoin dropped 64,000 down to 8,000 on Binance US back in, I think it was April 21. Apparently it was just a small error there. But yeah, hell of a fall there. It obviously did recover, and then we can see that has sort of fallen in line with where other altcoins have been. We'll have a look at the altcoin market in a moment. Okay, that's a newsworthy-ish event, but I don't think it contributes to the worst night in history of crypto. So let's dig into some of these other ones. And the news did come thick and fast here. So additionally, we're down under this bit here. Ethereum has been marked as a security in a lawsuit by the New York attorney. This would be the first time the second biggest cryptocurrency on the market has been marked as a security in public documents, which creates an unseen precedent that might cause serious harm to the cryptocurrency trading industry. So this is an interesting one. And actually, this stems from another article, which they haven't covered in this. So let's just go and have a look at it. So this is KuCoin. KuCoin faces regulatory heat over the sale of unregistered securities in New York. So the New York State Attorney General, Letitia James, has filed a lawsuit against KuCoin as she was able to buy and sell crypto on the exchange. That was the main article. Then within the court documents of that, she goes on to say, and I will find it once I get past all of these adverts. Here we go. The lawsuit also categorized Ethereum as an unregistered security. Per the document, users could buy or sell popular virtual currencies, including ETH, Luna, Terra USD. I mean, she's picking all the good ones there. Securities and commodities. So this action, as it goes on to say, is one of the first times a regulator has claimed in court that Ethereum, ETH, and however that comes, is going to lay a precedent down for the rest of the market. And one of the big boys that's in there, if this goes against Ripple and XRP, would be Ethereum and the ETH token. And what that then does to the rest of the altcoin markets, we'll just have to wait and see. I think there'll be a lot of scrambling trying to prove that they aren't securities. I know Polkadot's trying to do that. Whether or not it's successful is another question. So two real things there. One going after KuCoin, which is still one of the biggest exchanges in the world. They are based in the Seychelles, though, so how much massive damage it's actually going to do to them, we'll have to wait and see. But the fact that Ethereum has been labeled, I'm sure, is going to help to spook those who were already spooked after a pretty red news day. Tom's put in the chat, what's he put? At some point, I'd love to hear you discuss trading Bitcoin ETH as a pair in order to increase holdings without worrying about medium-term price action. We will try and cover that. That's like when a whale market sold a few thousand. Yeah, exactly. We're in the same mindset there, Tom. That is like when the 64 to 8K happened. I might try and cover that. I've got to be honest. I don't know if you can see on the screen here, but I did promise my kids we would go sledging. So I've actually set a timer because I'm pretty crap at keeping time to say that I will be off after 30 minutes and 11 o'clock we'll go sledging. So if I've got time at the end, we'll cover that. If not, I will cover that next week in another video. So I will let you know. But definitely an interesting way of trading. Going back to the article, Hedera Hashgraph, so HBAR, a decentralized proof of stake ledger, shut down network services, citing network irregularities, fueling rumors of a possible hack. The platform remains tight-lipped on the issue. So that also came out yesterday. There's a lot of stuff on crypto Twitter, TikTok, sort of explaining all that kind of stuff. Again, I'm not necessarily saying that is a huge news event which may lead to that, but hacks and that, unfortunately, par for the course in crypto, and they kind of come thick and fast. So I'm not necessarily buying into that one. One of the big ones that has happened this week, however, is Silvergate Bank. Now, we covered that last week in the live, so I don't necessarily need to go through all of that again, but just to say that since then, we talked about how they had voluntarily closed their SCN network, which effectively gave 24-hour access to banks to banks to access cryptocurrencies and to trade that 24/7. But now, actually, Silvergate Bank has confirmed their closure due to a bank run triggered by regulatory concerns over whether its payment network had facilitated thousands of customers' transfers from FTX to Alameda Research accounts. So they have gone into voluntary liquidation. I'll be honest, when this was announced on Tuesday, I wasn't sure whether or not it was going to be such a big event. And the reason I say that is a lot of the big institutional players had already abandoned Silvergate last week. So we knew that and moved on. I wasn't sure if then this news was going to continue any downfall, if it was just going to be a bit of a damp squid. Obviously, there does seem to be some negative connotation that's still attached with that. And perhaps we're now starting to see that the lack of liquidity provided by institutional investors is certainly not providing or filling up order books to potentially help the BTC price decline recover. Then we get into President Biden, and he's now gone on record yesterday in announcing that he wants to propose a 30% tax on any electricity usage used for cryptocurrency mining. He's stating that it is setting them back, that it's negative. He's going down the odd fossil fuels route, and how we're, evil cryptocurrency Bitcoin miners are really holding back their push towards a much greener United States. Obviously I don't live in the United States, so it's difficult to say, but we've been talking about how there's been a significant move away from sort of fossil fuels to more renewable green energy, and the United States is also one of those. They're not the biggest in turning that way, but the West are actually moving towards that. I don't know what data he's used to come up with that. I don't know when he gave this announcement, whether or not he presented some evidence to suggest that it was still very highly based on fossil fuels and how dated that was. But again, it's only a proposal. I know that the opposition have quite strongly proposed against that. That's what they do, isn't it? Oppositions. So we'll have to see where that goes. But again, it feels like another backward step in just what feels like a series of blunders from the United States, whether that be from politicians, governmental departments, regulatory. They just seem to be put in the United States always on the back foot of what could be an incredibly huge industry in the upcoming years. But we'll just have to see whether or not that is sustainable for them, or if they start to realize how restrictive that's going to be. And then the final thing, which, excuse me, I kind of in two minds as to whether or not this affects it. And I do need to do a bit more digging within it. But Silicon Valley Bank, so an actual bank now, suffered quite a bank run yesterday. I've got another article on it, so we'll go and have a look. But they suffered a 60% drop in price. That was during trading hours. I believe after hours at one stage, it got to almost another 20%. I don't know if that's recovered. And they had to sell $20 billion worth of bonds to stave off any insolvency issues, etc. And now we're starting to see a run on banks. As a matter of fact, a lot of the banks are starting to see a bit of heat recently. And this is just one of the bigger ones that we're starting to see that within. The ramifications of this are still to come out. The reason that I'm sort of tying this towards the crypto side of things would be that, the macro global, the macro United States economic picture, the fact that we're having a potential banking crisis or the start of a banking crisis, the ramifications, a knock-on effect of what that may do to, other risk-on assets such as Bitcoin and cryptocurrencies. Bitcoin has always been, Bitcoin was born out of the last banking financial crash in 2008. So maybe this is going to be a real acid test for it to see whether or not it's there to serve the people. That sounds really cheesy. But there to provide some sort of safe haven for the people if there are concerns over the banking industry. We don't know that there is any. Well, we all know there's an issue with the banks. We don't know if there is an actual issue with the banking system run on the banks, and we start to see some significant movement within that. But we will keep on watching, and we'll have a look. Okay, we talked about this news article, Silvergate and Silicon Valley. So this is what we were just talking about a second. Again, I don't know. I've got to stop using this website because there's so many. I don't know where the news articles start. But we just kind of touched on it. But Silicon Valley Bank stock collapse following the launch of a 1.5 billion share sale to shore up its balance sheet. There you go. I think we kind of covered most of the other things here. So I'm not just trying to see. March 10th, billionaire Perry Square founder Bill Ackman said the US government should consider a bailout for SVB. The failure of SVB could destroy an important long-term driver of the economy as VC-backed companies rely on SVB for loans and holding their operating cash. This is where it starts to get interesting. Well, let's just finish the article first, and then we'll talk about that. Lynn Alden, which I think she's great from a macro point of view, and well worth a follow if none of you do on Twitter. A really interesting stuff there. Commented that only a tiny fraction of the total 17.6 trillion in US bank deposits is actually backed up by physical cash. And this is the irony, isn't it? You remember when FTX collapsed? And there was, shock and horror across the financial world that a company as large as this could, effectively knock back their customer deposits one for one. When you look at these figures that I'm about to go through now about actual physical retail cash and what's being held, it's unbelievably shocking. Deposits can easily flow. So go back to the quote. Deposits can easily flow from one bank to another, but can't easily flow out of the banking system in aggregate. Big banks are rather safe, smaller and riskier banks less so. To quantify it, so back into the quote here from Lynn, US banks have $17.6 trillion in deposits, of which $3.1 trillion is backed up by cash. But here's where the stinger is, of which less than 100 billion, 0.1 trillion, is actually backed up by physical cash. So we've got $17.6 trillion in deposits in one form or another. Even digital cash is only covering, let's just say, 15% of that. But physical cash is, close to what, 2%, maybe a little bit less. So it's kind of shocking, really. And this is where, you start to see one domino fall, and does that then lead to just run on banks? People trying to take the money out. There isn't any money for them to take out. And then what we saw in 2008 occurs again. I think that's it from that one. Here's the one on President Biden's. I don't think I saw any particular data on there, so I'm not going to go through that one again. And then we have liquidations. It's always an interesting thing to have a look at. So Bitcoin, in losing its 20K support, suffered $320 million worth of liquidations in the past 24 hours. That's interesting, because if you watch what I do or look at some of the content I post on Twitter, I use High Block Capital, and I talk about liquidation levels. And when I'm talking about them, I'm talking about them significantly more. So what we actually saw around about the 20K level was in and around $16 billion worth of liquidation levels. I think people get a bit confused by that, because the data from High Block Capital, which I'll just bring up now, you've all seen these charts before, but if we take this level here where we were, obviously each time I move the mouse, you can see in the grey box at the bottom where the Z is, 4.4 billion, and it goes on and on and on. But these are liquidation levels. And so it doesn't necessarily mean, but by the price hitting that, we're going to actually see $4.4 billion worth of money lost, because people have stop losses, people actually take their trades off the table at a loss, etc. But the data that's being gathered here from, I think looking at the chart, it probably looks like it's Glassnode's, suggests that actually 3.2 million was lost due to causing liquidation, so liquidation levels being hit, which is amazing, really, that people still could try to trade without a stop loss. I just find it unbelievable that those would like to do that and do it so riskily as well, because a lot of the data shows that people are using 20, 25, 50x, and that's why the liquidations are so close. And we know that because I won't bother going through it, but you can look at the liquidation level charts. It's a bit of a different chart on High Block, and that gives you a breakdown of 25. The size of these bubbles represent 100x, 50x, 25x. So it can be very useful. Anyway, moving on. I only got 6 minutes to go before I get daughter bursting through with a sledge. This one, I thought I'd bring this article up here because we're going to go moving into the charts in a moment as well. But during that January run up and even into February, we had a lot of talk in and around the golden crosses and death crosses that occur or were occurring on the daily and the weekly time frame. Whilst I'm not here to necessarily talk about golden or death crosses, one of the key components of those is the 200-day moving average. And when I set up this article, I can assure you that Bitcoin's price was above 19.7 K, but actually looking at the price now, we're under that. So we are having that battle in and around the 200-day moving average. I'll take a look at those in the chart in a moment. And the other thing I wanted to sort of just bring back to everybody's attention, when we were at 25K, people were laughed at talking about the CME gap at 20,000. Well, we've closed that now, I'm not saying that all CME gaps always get filled. I think there's one even down at 9,000 and 3,000. I'm certainly not suggesting that they're going to get filled. But you ignore them at your peril, and you should always consider them as, if price starts moving in the direction towards the CME gap and it's getting close enough, just consider that they are magnets, and they do help draw price towards it. So the fact that we're having that battle in around the 200 moving average on the daily doesn't surprise me. Where the candle closes today will be very important with that. Speaking of that, then, let's just jump on to, Tom's put the market stumping again. And Alex has put, yeah, set your buy orders, folks. Well, absolutely. There could be some ideal buying opportunities. So just going to go back onto the Bitcoin chart. I've just got this indicator here. It is a golden cloth desk cross indicator, but it conveniently does put on the 200-day moving average. You can kind of see where that is at the moment. And looking at that golden cross, I mean, see it clear as day. The cross happened, and we had a nice spike up from 21.5 to $4,000 spike up, around about a 25% increase in the market. But yeah, since then, the rejection has come down, and I have to then talk about it. We got this up, and it just, there's no coincidences in life, is there? So yeah, okay, this was where the golden cross happened, beginning of February. I'm now on the weekly, so we got the 50 EMA, which is the green, and the 200, and we had the cross there, the death cross. And look at what caused, or look at where price action turned around on the 200 weekly moving average. And since then, we have just seen a continuation of a fall down. And for all of those people that, and I was one of them, talking about, the trend is your friend, etc., and we were seeing those higher lows and higher highs. Well, unless we see something pretty spectacular in the next 2 days, this trend is now broken. Let me just spread this chart out so we can see. I'm going to go back onto the daily. It's just going to be a bit easier for everyone to kind of see. But, yeah, it was nice that we had nice that we had that low there and there and then there. Oh, I'm not going to be able to do this and there. And then everyone was hoping that was going to be our next one, but price had other things. And so if we don't close above 24,500, I'm going to suggest that the trend is now broken. And actually, let's get rid of all of that. We don't need it. And I appreciate I'm going to big picture now, but if I throw on, on the weekly again. What worries me, I need to do that. I need to learn to, right, it's on the weekly. Yeah, that continuation of down. Yet we've come back up. I claim that we didn't quite hit a higher high there. I think it was like $40 or $50 out. So we've now had that rejection. Are we going to continue down? Are we going to find that bottom? Well, let's dive in and have a look at that price over the last couple of minutes that we've got. I'm going to change over onto a different chart. Tom's put 9K CME gap. Just because it's not happened yet doesn't mean it won't happen. I got called a clown in early 2020 for saying Bitcoin would go under 30K. Yeah, I think a lot of people did. I'd love to have done a little chart overlay of some of the shillers that you get on crypto Twitter. Last time to buy Bitcoin under 20K or last time to buy it under 30K. The reality is none of us really know where it's going to go. We can just make informed and educated decisions, but ultimately it'll do what it'll do. And I buy into that, although I've gone through the news, it's not necessarily the news or retail that drives price. I don't want to call them a clandestine organization, but I believe that there are market makers that manipulate the price. They're not bothered what the price is. They just want it to go up and down so that they can trap liquidity, trap liquidations, and make money that way. There's people that do that very well. If you're interested in it, I'd recommend that you follow the likes of Traders Reality or Trade Travel Chill. Both of them are absolutely excellent in explaining how market makers potentially manipulate the market. They both favor using the likes of high block capital. And I'm going to go on to this chart here now. The reason it worked out quite nicely is this will look like quite a messy chart once I drop us down. Why is that not kicked in everything? You might be in luck. Maybe I just need to get a bit closer. Let me just reset that. That seems a bit odd because normally there's all sorts of indicators and everything on it. Here we go. Now, I'm not going to go through necessarily all of this stuff here. It does look messy, and the first time you ever see it, it can be quite complicated. This is Traders Reality's indicator. It is free. So go onto his YouTube or onto his Twitter, and I'm sure you'll find out how you can get it on there. But ultimately, this is taking in a wide range of indicators and also psychological levels. And it is working on volume and vector candles. And I'm not going to bother going through the... Oh, there's my alarm. I'm a good job I set myself an extra 5 minutes. Let's just close that down. But what can we see here on the charts? I'm going to have to make the assumption that you do know how this works and what we've got. But we can see the price action has continued to fall down here. But we buy into the model of... Oh, I'm going to have to go onto the daily. I knew I had it on the day for a reason. of drops and rises and M formations and W formations. I'm going to just quickly take you onto the W formation, what we've seen and why we've seen the growth beforehand, where we may be on the daily. Then we'll take it down to the lower time frames. It might give us an indication of where things are going. We had a clear double bottom here. We call that a W formation, which is a bottoming pattern, which happened. We then saw a climb up with a sort of a reset. So that's rise 1. Another climb up with a reset. That's rise 2. And then another climb up. That's rise 3. So we've got 1, 2, 3. It's on the daily. Got a bit of a funny M formation there, but a topping pattern. So that's what we call an M formation. And what we've potentially now seen is a drop once with a bit of consolidation. And we're in the midst of potentially a drop 2. I'm going to draw lines like that so you can kind of see where the drop is. Now, this drop hasn't finished yet, so we don't know how far it can go. So we can then start to have a look at vector candles. And vector candles are effectively trapped liquidity in which market makers may seek to recover. And we've got a few vector candles on the daily below us. We're in a vector candle at the moment. It's only a blue one, but that's all the way down to around about 19,000. And then we can see some other vector candles. And it's because of the strong rise we had coming in out of January. There was trapped liquidity within there. And we've got that all the way basically from 18.7 down to about 17.4 on the daily. Now, daily movements generally happen over a longer period of time. So don't necessarily think that we're going to close all those out today. I mean, stranger things have happened. The moves that we've seen so far the last few days could suggest that. But that's where we are. We dropped down something like the 4 hour. And that's going to look like a mess. So let me just get rid of all of that. Otherwise, we're going to just be really confusing ourselves. And it is a slightly different picture. So we've got this M formation. We've then got drop 1, consolidate, drop 2, consolidate, drop 3. Okay. Now that would suggest actually that we might, whenever this drop bottoms out, start to form a potential W pattern somewhere, a period of consolidation, and then maybe an uptick. Now the uptick doesn't necessarily need to take out any previous highs, but we could then start to be looking at some of these vector candle recoveries. So anywhere from about 20,000 to 21,600. And if we get above that, then maybe 22,500 to 23,500. What I'd then like to do is I'd just like to have a look at high block capital and just see if there are any liquidation levels at time with that. And what I then do is I mark them on my chart. And I don't try and foreshadow which way it's going to go. I just wait for the movement and I have levels that are identified. That's exactly what we're going to do now. Unfortunately, I just need to move this back onto the liquidation heat map. Next one, it'll be a bit more Blue Peter-esque, and I'll have everything set up ready to go. I like to add, so it defaults with the Binance exchange, but I like to add BitMEX and Bybit, so you've got as much data as you can for those that are using derivatives trading. I'm on the 7-day, and what we can see is some levels here. I'm going to zoom in. So we've got potential key levels at 22,700. There's a lot there. And then we've also got just under 18,000. So there's quite a bit there. So now we can just go back to the chart. 22,700. Let's just draw a little box. 22,700 around about here. Okay, which by the way is at the ranging weekly high. So interesting to note. And then the other one, I completely forgot what I said. It's around about 18,000. So we've got it in and around down here. So we're in both of those levels. We're talking about billions of dollars worth of liquidation levels. There's no guarantee of which is going to favor which way at the moment, but I will leave these two on my charts. What is of interest to me actually is the ranging weekly high, and potentially, it's not uncommon to see market makers completely move the direction to trap. Now, everyone who thinks that the bear market's back, shorts are going to be through the roof, just whipsaw it back up there, take out that liquidity before the continuation down. And after such a sustained downfall, we expect at least a consolidation, if not a bounce. And for bounces, I would be looking potential retests of the 50, which again is around about 22,000. We've got the 200, so this is the 800 we've fallen under. But at a very minimum, you'd be looking at, I think it's the 5 and the 13. I'll have to double check, but even the 13 is around about 21,000. Certainly recovering those vector candles. So I don't know when that bounce is happening. We're going into a weekend. Maybe we start to see some sideways action over the weekend as we just see less trading activity. Maybe that's where we're going to do. I'm going to have to stop it there, I'm afraid, because I can hear them putting on their clothes outside. Just quickly go through anything else there. Not sure about MMs manipulating so much as fully controlling the market. Okay, yep, fair enough. I'm getting that one there. No heavy liquidation line until 18. Yep, thanks for that one, Tom. I do agree. Right, guys, let me just put that back here. Sorry, I'm kind of had to rush off at the end there, but you know what it's like. If you've got a 6-year-old and a 2-year-old, you make a commitment, you have to stick to it no matter what. There's no unreasoning from them. So, sorry, it was a little bit rushed at the end there. Hopefully, you got something from that. If there's anything that I've spoken about you want me to go into a bit more depth, I'm more than happy to do some videos on it. Just drop a comment in the chat box. If you haven't already, please obviously try like and follow this channel. We're a brand new channel. We don't have many subscribers. Anything you can do can help us grow. It would be absolutely fantastic. You can follow me on Twitter as well, which is exploring_crypto. And other than that, all I've got to say is I hope you have a great weekend. I'll be watching the charts like a hawk. I think it's the most entertaining thing there is, especially after a pretty boring period. I'm running around in the snow for a while. And yeah, have a great one, guys. And I will speak to you all soon. Cheers now.